bunch of vendors
on my Instagram.
Shoot. Oh, but it started.
Great. It's so funny because sometimes the thing does the countdown, sometimes it doesn't. But it's technology, I guess.
Yeah.
Well, Mel, thanks so much for joining me again. I really do appreciate it. I think that I walked away from last week's meeting with a ton of ideas and a ton of value from you. So thank you so much for that. One thing that I wanted to discuss with you today that I don't think we discussed last week, and I also don't know about it in general, but how did you start your due diligence journey?
Ooh. Oh, that's a fun one.
And you don't have to talk about it. The only reason that I'm bringing it up is because I did see something, I think today, right? Was there like a reel or a story or something like that you posted about this situation?
Yeah, yesterday maybe. I've got everything on auto, so I'm not quite sure when it came through, but yeah, so the origin of my service, right? You can see, there it is. I was a federal agent for 7 years. And so many people are like, oh, cop, do this kind of investigative work. And that's certainly got a lot to do with why I saw this as an opportunity. But the real reason is because I was stuck in my own horrible partnership lending situation and just misrepresented deals that were with two OGs back when, and I shouldn't say back when, know, like, and trust is the standard. That's what people say all the time. Know, like, and trust. Lend with who you know, like, and trust. When you're raising capital, people will donate to, not donate. It's a donation if you're going off of know, like, and trust.
There's plenty of donations in this business. Unfortunately, that's not what we want.
Yeah. So it was October 2022. I had a lot of funds available to me because I bought my Airbnb cash and then I fixed it up. So not only did I have, all the equity, I sold a house in Hawaii that I house hacked for 5 years and lended out. I did a value add. And so, fantastic market. You and I have talked about the California market and some of these very high entry but high appreciation markets. And so I had this cabin and I wanted to get into real estate, or not, I was already in real estate. I wanted to get into lending. And I was learning all of the TC ropes. I started TCing for some other investors while I was learning under Caleb Christopher's team at Creative TC. And so while I was doing that and just familiarizing myself with every single aspect, I was doing underwriting, closing, deal structuring, TC work. And I was like, let me leverage my funds, right? Because that's what they say to do.
Yeah, right.
So, and then there were two OGs that were recommended that were doing big deals that had a couple of different opportunities. And so they had a great pitch. They had great conversations. They were so nice. And I was like, yeah, I'll, leverage these funds. And so I did a DSCR against my property since it had cash flow and it had a whole bunch of equity. And I took that money and I structured it in like 3 different ways. One was they wanted a loan on a property. 2 was they wanted a capital investment into a partnership for a fix and hold operation. And then the third one is a boutique hotel that I still haven't gotten a K1 in several years. So is it real? Probably not. But the way it kind of came out was after 6 months of our buy and hold operation having very little progress. The progress was we had 2 dumpster assets and all of the money was gone. So it was $180,000 of my money, another $50,000 that I raised from a friend. And so $230,000 in, and everything's gone. And they agreed to some capital contributions that they just kept delaying and never making the contribution. We ran out of money and we had these assets that needed rehab. So They started ghosting me. And
That's usually what happens, right? I
it's
mean, usually
usually
they'll
what
just stop
happens.
communication.
Yeah, so they stopped
Mhm.
communications because I was like, "What's going on with these properties? You said they were under construction. I just sent someone over there because I just completely lost trust at this point because every week was like 2 weeks, 2 weeks later, 2 weeks, 2 weeks later, 2 weeks. So I sent people over to the properties and the windows were all broken out because they were vacant. Like they were in even worse condition than we bought them in, and they were dumpsters to begin with. So
And where were
uh,
these, Mel?
what's
Where were the deals?
in one was in Memphis, Tennessee, the other one in West Memphis.
Okay.
So, um, that's when it was like, okay, well, this is clearly, something's going on. But they came back when another investor was going to join this partnership. One of the guys that completely ghosted, the other one was kind of just dragging me. That was the 2 weeks, 2 weeks, 2 weeks guy. The other one just ghosted. He stopped communicating completely. He wanted out because he didn't want to do his capital contribution. So they bring in another investor, and all of a sudden they show up to all their meetings again, and they're dripping honey, and they're just talking about all of the progress. And I'm sitting there like, what progress? Like, all my money's gone. Like, the only reason why they're begging this person for cash is because they blew all of this. And so it's just like, I see what's happening here. And this person's going to lose all their money too, or they're going to rob Peter to pay Paul. And I would have been Paul.
Hmm.
So, anyway, that was like the big moment for me. And meanwhile, as I mentioned, I was doing, underwriting, deal structuring, and then helping people with their closings. And what I saw after doing that for that 6 months is 6 months is the magic timeline when everyone wants to get paid back. Well, that's when all these private lenders were coming back after a lot of deals closed and were like, hey, I've ever heard my borrower. And because I was involved in the transaction and the one communicating the whole thing, they came to me for help. So then I'm helping doing loan modifications. I was helping them, track down these ding dongs that were ignoring them. I had my own experience with this. So I was like, oh, let me be your bulldog.
Yeah.
So,
And I think your personality fits it great. I think that the way that you are interpersonally, you're very nice, very, very nice. And also, I would never want to get on the side of bad Mel, or upset Mel. And
yeah.
but I think that's a great quality to have, right? Because it's sort of this love and fear at the same time, right? So
Yeah.
okay, so all this stuff happens. So you're seeing the 6 month payoff
Yeah.
situation, and
And
then you're
so
having to hunt down these borrowers.
that's right. So between my own experience and then seeing the kind of state of the union, I was like, you know what? This is a trend here. And there's a lot of urging to take action and make mistakes and do it with other people's money. And we don't say those two things together, but those are two things we say.
Hmm.
So um it just made me realize like I'm in a unique position with unique skills, with unique motivation to do something about an industry problem because this is not a community problem. It may occur more in a community just because of the conditions and the trends and the way people work together. But nobody, how many cops are investors and don't do anything about this? And so I was like, I'm in a position, instead of being reactive, because I caught myself in this position helping people after their loans went bad. And I hated it. Like I hated police work. And I didn't hate police work because it felt really good helping people, right? And so part of that was like, ooh, this feels good. But then I was reminded of the really ugly side, which is how nasty people can be, how ugly it is to see the bad all the time. And then I was like, you know what? Even better, instead of helping people when loans have already gone bad, I know all of the trends. I've seen the, way these things can go down and framework help people. And so be preventative and take vitamins instead of the painkillers. So that
So
was kind of the origin of the service.
so in addition, then I'm really sorry about that. By the way, I think that people who intentionally take money from other people deserve a very special spot in a very hot place. But I
Don't
think you
disagree.
You made a really, really good point that it's industry wide. It's not community wide. And I think, regardless of the culture that a community has, for example, there are bad actors in certain situations, and you can't filter through everybody, right? And so it sucks to be in that situation. In addition to, obviously it does, in addition to the 6-month window where people were coming back to you and saying, hey, I haven't heard from a borrower, what other trends did you see that were pretty common that you were able to correct or kind of fix in your own due diligence business?
Yeah. So, what I have kind of challenged was this know, like, and trust, period.
Mm-hmm.
Like, that means absolutely nothing. I started by saying trust but verify, and I switched it to don't trust, verify, because it's like, why would you start with trust? Let's start with this is not a deal. How often, do you get quote unquote deals that come on your desk that aren't deals? Let's just start there. They're all not deals. And so, in the framework, the overarching one that that can be synthesized in a short amount of time, like we have, is vetting the deal, vetting the person, and verifying the information. Because one of the standards being know, like, and trust, no verification, right? The other standard being don't invest in the deal, invest in the person. Well, shitty people will ruin a good deal, right? So
100%, yeah.
deals don't default, people do. So,
Right. Right.
and then the other being that you have to vet the person as well, because if someone's not paying Visa, like we said last time, who's to say they're going to pay their loans? And that's where you want to verify whether people are capable of making those payments and having the experience that they claim and all the other things.
Yeah. I think it's easy to say that people have experience. We see it all the time, right? Where people are saying, yeah, I'm doing a dozen deals a month or 20 deals a year, whatever it is. And the reality is that they're not, or they have a friend who does, and they're trying to piggyback off of, it's like that. It's like stolen valor, right?
Stolen valor. That's a beautiful way to say it.
But it's one thing we said last week, we talked about this a little bit last week, was the idea of course, vetting the borrower and also vetting the deal as well, right? It's, as a lender, you don't want to bet on a deal that isn't a good deal or doesn't make any sense whatsoever, right? We're always looking at the entry, we're looking at the exit. Do the two make sense? And then in addition to that, what you're doing is you're doing a lot of the personal due diligence, right? You're looking at the borrowers themselves. And don't you also have a service too where you are verifying your lenders?
Yeah. So it's an investor passport, and it's for both lenders and borrowers. So
Got it.
that's where we go over background, education, experience, assets, income, and credit. And it's presented as a third-party verified CV, essentially, because I can give you my resume and it doesn't mean that it's true. So, so that way you can have a little check, or unverified, or, there's some sort of, third party that's involved with saying, yep, it's true. They've got this degree or this, gut feelings. I do not, sorry, I'll finish that sentence, but,
Sorry about that.
yeah, no, that's fine. That they've got what they claim to have. If there's certifications, if there's degrees. Also, I can see if certifications and licenses are revoked, or non-renewed. And you can see sometimes if there's any ethical inquiries against them. Something interesting that I've only come across twice. So I don't know if I can catch it all the time, but I have caught it before. So, and if someone says they have a whole bunch of assets and I can't find them, no problem. I just need the deeds then. So it's a whole bunch of verification. But yeah, so I offered those for people because I tell people you should show people that you're trustworthy, not tell them, right? So that's that verification service that I offer.
And one of those too is making sure that from a borrower standpoint, that would you even encourage a borrower, for example, prospective borrower, to speak with past lenders, excuse me.
Oh, of course.
Prospective lender to speak with a past lender that a borrower used before.
Yep, that's a reference. So if
Cool.
you've had a loan before, whether it's private money or a traditional loan, I'd like to know. Make sure that there's some sort of proof of performance here, because HUDs are not proof of performance. Any ding dong can close. It doesn't mean it's a good performing asset. It doesn't mean they didn't default on it. It doesn't mean it wasn't just a wholesale, because a wholesale does not equal a buy and hold asset. That's a completely different game. So just got to make sure, HUDs are a metric, but they're not an indicator of performance. It's just an indicator of closing.
Now, I hate to hang on this sort of knife experience that you had, the stabbing experience that you had to really get to the point where you want to start this due diligence business. But Jenny brings up a good question. So during that time period when you were lending on those deals, did you have any gut feelings?
Yeah. So here's what I tell people, and especially when you're new. So what happens is you don't trust yourself when you're doing something new. Like, I'm the new person here, they're the experienced people, right? And then when you've got these people that are dripping honey, as I like to say, people drip honey when they want your money, they intentionally will make you feel comfortable. So you feel comfortable. Did I have gut feelings? I knew I didn't like them. And this is something that now I work with my investors. I'm making sure. So I've got that informed investor program that I mentioned to you, that where we help people determine their lending criteria, their due diligence process, and deploy their funds safely. And so they can bring the deals to me. I vet them. We'll do the background checks, and I'll explain to them, any risks and liabilities, any restructures that we should do, or recommend rather. It's their money; they can do what they want. But gut feelings. I knew I didn't like them, and I knew values-wise, I didn't like their exit strategies. And so for me, I think that's an indicator that you shouldn't work with somebody, because we could have a whole conversation on that. Everybody says, like we talked about last time, that you're getting into this business to help people. And so if people are deploying these exit strategies, they're just kind of like, don't get me wrong, I know you can make money doing this. Doesn't make me feel good. So for me, it's not my thing. But just buying trash assets, fixing them up at the bare minimum, and then renting them out Section 8 and repeating. And to me, I'm like, sure, you're providing housing. Sure. Are you helping people? Is that your goal? So anyway, it just feels greedy and gross. And all of their exit strategies were greedy and gross. And I bid on because I was looking at returns, and I use my very painful lessons as, I say my mess gets to be their message. Like, don't invest in the returns, invest in the information, invest in values, invest in, these other much more important, much more critical aspects. So,
I think that's a really good point, because I think that anytime there's something off about somebody, especially when money's changing hands, I think that's a really good indicator. And you learned the hard way, but if there's something off, that means that there's probably something off. And I was talking to my wife about this all week long, where I'm looking at some people who are public people, and I'm looking at that person, for example. I'm going, that person is a complete snake oil salesman. How do people follow him, right? And so my gut is telling me, don't be a part of that community. Don't buy that course. Don't follow that person. But somehow there's always somebody who's going to connect from a personal standpoint with that message or with the person. And so I think it's really hard to count on your gut feeling. However, I think it is something that you should take into account in addition to the full verification. I mean, I think that absolutely makes sense. So Thank you so much for putting that service together, because I know that it was a hard lesson for you to learn, but it's going to benefit a lot of people.
Totally. Yeah. I'm like, I was doing some reflection on this, and I was like, I got to be the sacrificial lamb, except for I didn't die. So, like, a lot of people lose money and they stop, and that's fair. Yeah. It makes them question what they're doing and why they're doing it, and whether or not it's the right thing. And also, you start new things with all these doubts, and then you immediately get proof that your doubts are true, that you do suck at this, that you shouldn't be doing it, you should go back to your W-2 or whatever. So And I think it's okay if people do want to quit, but I also think there's ways to, lick your wounds, get back up.
Yeah. Well, good. We're glad you did, because your service is really awesome. What we talked about last week was a subject to transaction, ways that we can protect the seller in terms of the structuring of the deal itself, right? We talked about contracts, we talked about servicing, trusts, things like that, ways that we might be able to avoid due on sale clauses. But the idea was really, how can we protect the seller from a contractual standpoint, right? How can we put them in a really good position? What I wanted to talk to you about today was how we can protect the seller post-close, right? So how can we make sure that we put, if we are assigning, for example, how can we make sure that we put the best buyer in there? Or if we're keeping it, how can we make sure ourselves that we are good borrowers or good buyers for that property? So, one thing that we run into a lot, I don't know if you're seeing it too, is that some of these sub 2 deals that are being sold on assignment are just being sold for someone to make an assignment, right? It's whoever's going to pay me my assignment fee, I'm going to take that buyer, right? That's my key to my kids eating the next month. When my perspective is that I want to do the very best I can so that I'm not putting my seller in a position where they are going to have to default on the property, right? Or they're going to have to worry about the payments being made. And so what we've started to do, and I'm curious to get your opinion on our strategies here. So servicing, obviously very, very important, right? I want to make sure that the servicing company is letting everybody know that a payment is being made. In fact, if they're not doing it, I'm doing it myself, right? If I call up the bank, I'm making sure that they send that email confirmation to the original borrower. We're also doing things like, if we do assign it, we want to make sure that we verify that buyer. And so what are some ways that we can verify our buyers? What should we look for from a buyer's or from a signer's perspective at our assignee to better the chances of them making sure that the payments are being made?
Yeah. I know we've talked about this, and I believe it's something you actually even utilize, but RMLOs are super important for that, for being able to verify their ability to make those payments. And, that's a licensed, regulated certification and process to basically be the bank, right? And so make sure that people can make their payments, their DTIs, right, their credits, right. And I think whether or not you use an RMLO, you should be verifying these things. We like to say no cash, no credit, no problem, right? But it is a problem if they're not making payments. So I say background and credit check, the end. Like, I want to know if there's liens, judgments, bankruptcies, criminal record. I want to know if there's, defaulted payments, credit cards that are maxed out. And that scares a lot of people because they're like, no, I don't need credit. It's a sub 2. You're like, no,
it makes
don't.
it harder for the assignee or for the assignor too, right? They're going, I don't want to verify. And what happens if that buyer isn't qualified? Well, the reality in our world is that if that buyer isn't qualified and misses a payment, it's so much more hassle for us as the assignor than, the $5,000 is going to be at the end of the day, right? That's a hassle to make sure the deals are up to date. I've never understood that idea, especially for people who have done this before, where they understand a subject to transaction is a long-term relationship, right? It's something you're going to be in until that loan is paid off at the very least. And so I need to make sure that I am not having to step in. And the best way to do that, I love the RMLO idea. And so the RMLO is going to check credit, probably going to do a little bit of a background check, right? Are they also going to check income?
That's a good question. I'm pretty sure they've got at least some sort of DTI configuration they do.
Mm-hmm. And that's important, and I think another thing that we should look at too probably is real estate owned. What does their portfolio look like, and what's the history of payment on that? Do they own a dozen properties, but they're delinquent on all of them? And that's something. How would we be able to find something like that out?
So I don't know how an an RMLO does it, because I haven't studied, I haven't gotten that certification or even worked with them, because I don't wholesale, but I, in my service, do the background education, experience, asset, income, and credit verifications. And so I have my use license for fraud prevention and fraud recovery to be able to pull all of this information. And I use two pretty powerful databases that get all the liens, judgments, bankruptcies, criminal records. I mean, I can see neighbors, like I can get neighbors' phone numbers and spouses. And so I can see address history of where they've lived. I can't always see assets, and that's because people can close in different assets. I can see some affiliated businesses, even if people will try to do the whole, some layers of their business. I won't say how, because I don't want to give indicators for people of how they could continue to mask their stuff. But
just note that there are lots of entities, probably. Let's just put it that way.
And there's all these different data points that they cross-reference that they can then pin to somebody. And so if I can see like two businesses I can find, then I go and do a search of that business. Now, I don't take it that far, because I'm not doing an investigation anymore. I used to do front company investigations for foreign entities that would circumvent U.S. trade law. So I kind of have a history of digging into front companies, and I think single use LLCs have a very front company flavor to them. So it's very familiar territory for me. But for basic checks, there are ways to be able to check. And again, if somebody's trying to buy a property, provide proof then. Give me the deeds. So show me proof. And
it can be one of those like step questionnaires, when you go through a form and it says like, do you own other real estate? Yes. Yes. And then it opens up to another page. It's just list all, Think, oh shoot, I don't really own anything. Well, you said yes on the last page. So, I think that's super important, because I think that history, you're probably just as big a believer in this as anyone else, but history of payment isn't necessarily saying in the future they are or not going to make the payment, but it's a really good indicator.
Yeah. I call it patterns of behavior. Yeah. There's a pattern of behavior here. Either you pay your bills or you don't. And let's say you don't on occasion. How long ago was it? What were the circumstances? Let's do a statement of explanation. If it's a big enough deal, if it's like $160 missed payment, whatever. Forgot to set up my auto pay. But there's a pattern, we're going to talk about it. Or we're just going to say, no, thank you, denied.
And I think we have to be okay saying no, and it's hard for people who have never done a deal, for example. There are a lot of people in our sub-2 community who are looking to do their first sub-2 deal. And most of the time they're starting by assigning. They're not probably going to buy it for their first deal. And they might be working for 6 months or 12 months to get to that point. And let's say they get one under contract. They have a buyer who's ready to go, but that buyer isn't qualified. It's tough not to move forward with that buyer.
It is. Yeah.
It's hard.
And I think that's where people need to go back to the mirror and say, like, well, what are my values, and what's the point of me doing this if I'm going to start compromising my values just to get my first deal? Yeah.
So I'll give you a couple anecdotes that we can talk about. Probably a good topic of conversation when it comes to this, because when we first started to assign subject to deals, we were kind of in that category of, okay, well, we don't really know what the next 6 months looks like. And you learn that pretty quickly, by the way. 6 months goes by real fast.
6 months. Yeah.
But, if you sell a deal to someone who does not perform, that does come back to the person who is assigned that deal. And it doesn't look good for them at all. And so we've had, let's see, I'm trying to think of, this deal that I'm going to bring up is not a deal that's in default by any means, but it's just an example of what a pain in the butt post-close can be. Okay. So this seller knew that we were going to sign the contract. The contract was assigned to a very reputable buyer, and the seller who had a little bit of, I think she was OCD, something along those lines. She was agoraphobic. That's what it was. And so
Explain,
she would
what is that?
fear. I think agoraphobia is fear of open spaces or fear of public,
Okay.
something like that.
I
I'll make
learned
sure I look it
something
up.
new.
So she would drive past the home every weekend and make sure that the grass was cut, for example. And so we would get phone calls and emails saying, hey, the grass is over half an inch taller than it should be. You guys need to cut it. And
You can give up the HOA president role?
no, and we had signed this deal months before, right? We're not even the current owners of the property. And so, those things happen, right? People are contacted, sellers are contacted by banks or insurance companies or anything that relates to the house because they are still on the mortgage, right? That's the underlying thing here, right? They're still involved. And so they are still going to receive all of that communication. And another one, a worse one, unfortunately, is where we assigned the deal and the borrower borrowed money. And when the borrower borrowed money, the borrower didn't have a proper exit strategy in place. And I mean, it was a good exit strategy. It would make sense. If you took a look at it, you go, okay, this makes sense. But what happened was they got overloaded and they couldn't sell the deal. They just didn't get to actually working on selling the property. And so the lender on it, a private lender, just said, look, I don't have the funds anymore. I'm done. I can't keep paying a $3,000 mortgage monthly. And so they actually had to give the property back to the original seller. But so those things happen. So you really have to make sure that you sell to somebody who you think is going to make the payments, not just to make a couple grand on the deal.
Well, and may I ask, I'm sure you had a lot to do with them actually giving that property back, because had you not been involved,
we had to. So here's the story. The story is actually longer than that. I gave you the really short version, but I'll give you the short second half here. We were actually supposed to close end of August of last year. The day before, the buyer said, look, we can't close until next week. Okay, no problem. For some reason, we had to close on the property. This was in Florida. Escrow fees and title fees were really expensive. So instead of, I think we were going to make $9,000 on the deal. But because we had to pay escrow and title twice, we ended up losing money on the assignment to help these buyers who we thought were legitimate big time buyers, just to keep that relationship. So not only did we lose money on the assignment, but they ended up never following through on their obligation as well. So it's a pain.
Were they trying to wrap it?
Yeah.
I knew it. Friggin' rapsters.
Of course you do.
Raps,
you know
I just hear these patterns over and over and over, and it's like, oh my gosh.
We'll put it this way. This was one of 100+ properties that this happened on.
Oh, those guys. Okay. Yeah.
Yeah.
But they're not alone. That's the thing too. I knew of so many default wraps before those ding dongs. Wraps are a total cutie. I call them a cutie newbie idea, because when you lock up a not great deal that doesn't cash flow, somebody goes, oh, just wrap it.
Well, and that's the justification, right? This doesn't work as a long-term rental. Oh, well, just buy it and wrap it, right?
Just wrap it. Yeah.
And until recently, when Sub 2, the mentorship, our community, for example, was just starting up, it was Wild West for a little bit. It was yeah, just buy it and wrap it.
Just wrap it. Yeah.
Okay.
So
and
easy.
then for some reason, those stories don't come out, right?
Mm-hmm.
So anyway, but yeah, I think that making sure, first of all, that the buyer is good is a very, very important thing. I love the idea of RMLO. I love the idea of servicing. I love the idea of checking background and making sure that they can afford it. I love the idea of checking real estate owned if we can. One thing that we're doing too, by the way, and I want your opinion on this, I'm kind of curious. We're trying to collect certain number of months of payment in advance, 2 or 3 months worth of payment.
Make an escrow account.
Yep. And so, like we talked about last week, if we set the definition of default at 30 days, for example, and a homeowner, a past seller, for example, can start a foreclosure process without payment for 30 days, why can't they just access this escrow account, for example, to make sure that the payments are being made so it doesn't have to come out of their pocket?
That's right.
And
Yeah.
so that's one thing we're trying. What do you think about that?
I think it's great. I think you have to be very, very clear that it is not a prepayment, that it's an escrow account that cannot be touched.
Yep. Yeah. And
So
these are
otherwise,
the,
like, oh, I made 6 months payment. No, you did not.
these are the reasons it can be accessed, right? You
Yep.
very clearly have to define it.
Correct. Yeah. So your disbursement terms just have to be clear. Yeah, that's beautiful. And that's a fantastic option.
Good. Well, it got the Mel Palmer seal of approval. So that's all that I really care about. What other ways do you think that we can protect a seller when it comes to selling a deal? So like we're talking about right now, most of these are on assignment basis, right? If we're buying it ourselves, then of course we can figure out if we are a worthy borrower in this situation or a worthy buyer. Anything else that you can think of that we can do if we're assigning it or if we're selling it to a homestead buyer, for example, or something along those lines?
Yeah, I mean, I think you made a great point because you're just mentioning an exit strategy. I think underwriting the exit strategy is important. One, perhaps, is a good one. But however they plan on using it, again, so where I look at background, education, experience, assets, income, and credit, when it comes to that background and education, that experience part, people are like, oh, why education? We don't care about that. Well, it depends on what kind. And also, if you have no experience as an investor, I still want to see that you've accomplished something at one point, not that you're just hopping from thing to thing to thing, because real estate is one of those industries that anybody can get into. So,
right. There's no barrier to entry.
Zero barrier.
Yep.
Barriers you're in your mind usually.
Yep. And what's funny about that is that the people who should be doing real estate are stuck in their heads about it, whereas the people who should not be doing real estate are like, screw it. Let's just do it. Let's just buy everything and figure it out as we go.
Yeah, the Dunning-Kruger effect, right?
No, tell me about it.
The less you know, the more confident you are. So you've got these overconfident, undereducated, have no freaking clue what they're doing. They're like, yeah, let's go.
We see a lot of that.
Yeah, totally.
Yep.
Like the lower people would score on tests, the higher they thought they did. And the higher people scored on tests, the more they overthought, like, oh, well, I probably got these questions wrong and I probably got that. And so the total opposite effect, basically. They say, like, the more knowledge you have, the larger your shore of ignorance, because you just realize as you learn more, the more you don't know. Whereas someone who knows nothing, they've got no shore of ignorance. They're just full of ignorant. Anyway.
So Bill Walton just passed away, the basketball player. I'm a big UCLA fan. So anything that has to do with UCLA basketball or football, even, past and present, I'm into it. So Bill Walton just passes away. Do you know who Bill Walton was?
I saw, but no, I don't follow sports.
So he was probably one of the greatest college basketball players of all time. And he played for this coach named John Wooden, who is one of the greatest college coaches of all time. And John Wooden's known for saying things like, he has these, is idiom the right word? Somewhere he would say, be quick, but don't hurry. Or, things like that. And when Bill Walton graduated, John Wooden gave him his own idiom. And it said something like, the most important things you learn are the things you learn after you feel like you know everything.
Totally.
And for Bill Walton, that makes total sense if you know the character. But we see that a lot, in our community, we do lots of Zooms with people who are brand new, and the people who are all gung ho, who are making mistakes. It's great to make mistakes as you go, as long as it's not impacting you too much financially or anyone else. And we see a lot of that, though. We see lending opportunities, which I'm sure you do, where people are coming to you or lenders saying, hey, I need $100,000, so I'll give you $150,000 in 2 days. Well, what you're doing doesn't make any sense.
Yeah.
How common is that? Are you coming across that a lot?
Well, now that there's the other program, yes, because some of those are really good gap funding opportunities that truly do have that option. But what people don't understand is those types of deals never leave escrow. But the people that will present them because they see other people seeing those same numbers, but a completely different structure, will be like, yeah, I'll take that money. I'll totally pay you back. And now you're just investing in the returns, not the structure of the deal. So there's no security, there's no safety, there's no protection, and all you see is other people do it. And so when you see that other people do it, you think, I can do this too. And maybe you can, but we're missing the part of structure in the ways in which you're protected when you're doing that stuff, because higher risk, higher reward, right? But higher risk. So back to that first part. And the way you mitigate risk is with paperwork, with due diligence, with third-party services. And so I am hesitant to say that's not a good deal because you don't even know what the structure is. But what happens is people will just present that as the deal in its entirety, and somebody else will chomp off on it as, you know, an exciting opportunity for them to make money. And that's that's the trap.
Hey, buddy.
Cutie.
Hi.
What's up?
So, the reason that I wanted to speak with you about this initially, before we even decided to go on Instagram and Facebook and YouTube and all that, was because of my concern for what I'm personally seeing in the market, especially when it comes to assigning subject to deals. And Wholesale Hotline this past week with Pace and Jamil and Jerry Norton talked a lot about regulation and wholesale being regulated across the country. It started in Illinois. I think it's in Oklahoma in some places there. And then of course now South Carolina. And my concern here is that sub 2 is going to start to be regulated to some degree. And so my initial phone call when I started to worry about this was to you, knowing your background. So I want to say, first of all, thank you so much for joining us the past 2 weeks. It's really been insightful. And I love the business model that you have. I love how you are protecting others. You're protecting the community. You're also protecting the business in a lot of ways, right? What you're doing is letting this go to the point where people are able to do this more safely with you than they are without you. And so in terms of what we've discussed the past couple of weeks, I know we've talked about contracts. We've talked about how to protect a seller in an assignment. What are the things you think might be valuable for people who are doing creative deals, seller finance and sub 2 deals, or even from the lending side, regardless of the type of transaction? What other things are popping out to you that we might want to communicate and put out there to protect everybody?
Yeah, I mean, I think people I don't want to say, hey, you have to know everything before you get into it, because that's going to hold back the analysis paralysis type that probably could start, right? But I think safety nets are important, right? Whether that safety net is a bit of cash, whether that safety net is a Mike Jackson, somebody who's experienced and has a team, and, making sure that you have a net. You're not doing this just freely and wildly and, I'll figure it out as I go. I think that's a recipe for failure, and you're going to hurt yourself and others in that scenario. And maybe not the first time, but when people do that, they create, again, those patterns of behaviors and these practices. And then you get comfortable being sloppy. And you think, well, it worked the other 2 times I did it. And the third time when it doesn't work out, or in that horrible incident, the 100th time, when all 100 didn't work out, but it just took us 5 months to figure out, because turns out 98 people were being very generous with them because they think they present
Nice.
as a certain way. Yeah. Just like my ding dongs.
Drip honey, right? Is that your phrase?
What's that?
Dripping honey, is that what you said?
Dripping honey, yeah. They drip honey when they want your money. Yeah.
I might change my Instagram handle to Dripping Honey.
I'm trademarking that.
Okay. Good. I gotta go. I'll be right back.
I gotta go. Let me file. Yeah.
Yep.
No, Yeah, so I think just being pragmatic. I know we're dreamers. None of us are doing this because we're not like visionaries to some degree. People want to get stuck in this integrator visionary box, but the fact that you're starting your own business, you're doing a new venture, you're getting out of your comfort zone, like don't think that you're the unicorn here, right? There's a lot of people that are doing this, but so dream, but be practical while you're doing it.
And I think also too, and I think you kind of mentioned it, is don't do it alone. You know, especially if you're brand new, there are so many people who can guide you correctly along the way, you included, where you're going to mitigate a lot of the risk that you would encounter if you weren't doing it with somebody. And if you're just figuring it out as you go. And, you know, I think a lot of people look at this business as, why would I bring someone else on? Worst case scenario, I have to give away part of my profit on a deal, right? As opposed to, hey, let's get these first dozen or 2 dozen done together and make sure we know the process. And once we know the process, then we can eventually do it on our own, but let's do it safely.
That's right.
Yeah. So Mel, I know that you have a big trip tomorrow. So congratulations. I hope you really enjoy yourself. How can people get a hold of you?
So I am at melpalmer.me on Instagram, and it is capitalverified.com is my website. And those are the 2 primary methods.
I love that. So reach out to Mel, guys, if you guys need help with any sort of lending opportunities, borrowing opportunities, reach out to Mel. She's a fantastic person to work with. Mel, thank you so much. You've been fantastic as always. It's good to see you.
Good to see you.
We'll see you next time.